We have Anant Ladha, founder Invest Aaj For Kal, to answer all our viewer queries. So thank you so much, Anant, for joining in today, and good evening. We have first question for you. That's from Praveen Bajpayee, and he says that he's 60 years old and have a wealth of about 80 lakhs accumulated via traditional investments. And here he's talking about fixed deposit, PPF, and a land sale as well. He wants his money to obviously keep growing, and which is why he's thinking of trying mutual funds as an investment option. How can you help him out, Anand?
Hi, firstly, thanks a lot for having me on the show. Here, solution is very simple. Firstly, we have to decide that what amount do we need to maintain our regular flow of income. For example, this person wants 35,000 rupees per month as his regular income. Then probably 50 lakh rupees of his total corpus has to be invested in a place which is comparatively very safe. Maybe FD or debt fund at max. Plus balance amount. For example, in this case, balance amount will be somewhere around 30-35 lakh. That amount can be invested in equity mutual fund because any which ways that amount he will be inheriting to his coming generation. So why not to grow it up and then inherit a larger amount? So we have to first divide our complete mindset in two parts. One is the fixed amount which we need on monthly basis, and balance amount we can invest in equity.
All right, let's move on to our next query. It's from Sharvari, and Sharvari is 45 years old, earning about 1 lakh per month. Been investing 5,000 in mutual funds, in 3 mutual funds in fact, and wants to understand if the SIP should be continued or stopped if the fund mix is good. Sharvari has DSP PR top 100 equity, HDFC top 200, and IDFC Premier Equity growth. And apart from that, PPF, NPS, and fixed deposit is also a part of the investment portfolio.
See, here we have chosen 3 mutual funds, but stocks in those mutual funds are overlapping a lot. So instead of investing in those 3 funds, maybe we can invest in one of the funds. DSP funds look decent and we can invest in that. Balance amount, slowly and gradually we can start taking flavor of flexi cap, and then we can move towards multi cap, which will give better diversification to our portfolio and will even help us to reach our returns in a maybe increase our returns. Probably with the help of multi-cap fund, we can somewhere target 12 to 13% of annual returns. So yeah, we need some flavor of multi-cap and flexi-cap fund. Presently, we are overlapping.
Why are we recommending a multi-cap? Can we do a flexi-cap over here?
Multi-cap, because then compulsorily we will have 25% allocation each in mid-cap and small cap. So we will have some exposure slowly and gradually in that segment as well.
All right. So apart from that, the current fund mix is perfect according to you. Do we really need to have a different blue chip fund?
No, we don't need a blue chip fund. Rather, we have to consolidate blue chip funds. We can have single blue chip fund or maybe index fund, and balance we can park in multi-cap fund. That we are already taking care with PPF, so it's okay.
All right, let's go ahead, and Keshav has his question ready for you. He's recently joined Army and has good earning. He's got a baby girl as well and wants to know how can he start investing for her future. Very interesting question, but then very less details. Anand, over here, one needs to understand to help him plan, we need to know how much can he invest monthly, how can he go about it, what should be the investment amount, and we're talking about girl child's future, which means education, obviously, so as a first goal. So talking about 15 or maybe 17 years or as time horizon period, how can he start?
See, as you rightly mentioned that we have very limited data in this particular question, but still for girl child, 2 investment options are really good. Firstly, we should always look at Sukanya Samriddhi scheme. Presently in 2022, it is giving somewhere around 7.6% of interest, plus it is giving us income tax deduction. So almost it is very viable for all the parents who are having girl child to have Sukanya Samriddhi scheme, which can be opened from bank, or maybe we can go to post office and open that account and invest our money. And majorly it is in debt, so it is safe allocation. Second, we can start equity SIP. Probably if our income is limited as of now, we can start with somewhere around 5,000 to 15,000 of monthly SIP, targeting at a corpus of 1 to 4 crore for education.
Let's talk a bit on Sukanya Samriddhi. I mean, obviously, this cannot be the only investment you should be having for a girl child education goal. But having said that, it's a debt instrument, and you have your interest rate revised every quarter. Now how much of an investment, in terms of percentage, in terms of ratio, should be going into a mutual fund and Sukanya Samriddhi?
I think roughly around 20% versus 80%. At max, 30% versus 70% can be planned, where 20 or 30% we can park in Sukanya Samriddhi scheme. If our income is limited as on date, so minimum we can park around 3 to 4,000 rupees on a monthly basis in Sukanya Samriddhi scheme.
Let's move on. And another question is from Meenal, and Meenal says that she's 30 years old and wants to buy a car worth rupees 7 lakh in 5 years, and she's been investing 5,000 monthly, and she's going to obviously increase his SIPs every year, and she wants to understand if she can actually for the car's goal, can she use money from her funds or should a loan be taken? Now she doesn't have any insurance, and she doesn't want to invest in any insurance policies also, which is good, but then I hope she's not talking about life insurance and health insurance over here. The funds that she's been investing in are Axis Blue Chip, Nippon India Large Cap, HDFC Mid Cap Fund, and she also has an emergency fund of 7 lakh. Now that's impressive. Anant?
So basically, whenever we are making a decision of buying a car, we have two psychology or two set of rules which we have to follow. First set of rules says that we have to follow 30 is to 10 is to 40 rule, where minimum 30% we need to put in as down payment. 10% can be the maximum monthly EMI. If 10% of our monthly income can be the maximum EMI which we are ready to pay for our car, and 40% is the maximum monthly EMI even after including the car EMI. So we have to follow this rule and then decide the maximum amount of loan which we can take. Second set of rule or second set of principle which I personally follow is that you can buy a car whenever you have 100% money parked in your bank account. You directly go to the shop and completely pay the full amount in advance and buy the car. That is the process which I personally follow. So if we go by second rule, roughly if we are investing 9,000 rupees per month, in 9,000 rupees per month for 5 years at 9% interest, because we just have 5 year, corpus of 7 lakh can be a bit difficult. We will probably need 7 to 8 years to meet that target. So yeah, 9,000 rupees per month with 7 to 8 years can make us reach our goal.
All right, so that will be all. Thank you so much, Anand, for being on the show and helping our viewers plan their finances and their goals.